Hello friends, so welcome to Crypto the One Stop Solution, and in this video we're going to look at some FAQs on the candlestick analysis. So generally the questions which are asked from many people are which candlestick pattern is the most powerful. So we have two candlestick patterns, such as engulfing pattern is one of the most powerful pattern which is available on candlestick analysis. So once this pattern is formed, that there is a strong chance that setup will be performed by the asset and we can take the trade accordingly. So one of the most powerful pattern is an engulfing pattern. It occurs when the second candle completely overshadows the previous candle or completely engulfs the previous candle. So we are going to look at all this candlestick chart patterns in detail in the upcoming series, but for now you can understand this one of the most powerful pattern is an engulfing pattern. Next is what is the three candle rule. So in this case, the three inside a pattern is a bullish reversal pattern composed of a large down candle, a smaller up candle contained within the prior candle, and then another up candle that closes above the closing of the second candle. So this is the three candle rule. Again, we are going to look at all the candlestick chart patterns in the upcoming series. What is the best time frame to trade candlesticks? So if we talk about the candlestick time frame for the day trading, then the most commonly used time frames are 5 minutes and 15 minutes chart. So if we are a intraday trader, then in that case the 5 and 15 minute time frames are very good. But if we are long-term hodler or if we are long-term investor, then in that particular case the long-term strategies of 1 day and 1 week time frames will be very good. So depending on the time frame of investment and trading, we can look at the multiple time frames which are available on the chart patterns. Next is what is the most important candlestick. So one of the most important candlestick is a doji candlestick, which is considered to be the most important single candlestick pattern. The doji can give you an insight into the market sentiment, and dojis are said to be formed when the opening price and the closing price of the stock are the same. So in that case, the doji candlestick are implemented on the asset. Now let us take the next question. Who is the father of candlestick chart? So a guy named Manisha Homa, which is a Japanese rice trader. So he invented the candlestick chart pattern. So this is the chart pattern which was invented by this trader, a Japanese trader in the 18th century, and his name is Manisha Homa. It is a Japanese trader. Let us look at the next question. Which candlestick indicates the buy? So a black or filled candlestick means the closing price of the period was less than the opening price. Hence it's a bearish candle and indicates the selling pressure. Meanwhile, a white or hollow candlestick means the closing price was greater than the opening price. That is a bullish candle and it shows the buying pressure. So in the latest time frames, you can see that we have two types of candles which can be hollow or filled, or we can see the time frames which are having the candlestick of green and red. So green means the bullish candle and the red means the bearish candle. So in that case, the bullish candle, we have the buying pressure is much more. So in that case, the asset price will rise, and in the case of the bearish or red candle, in that case the selling pressure will be more. So in that particular case, the price of the asset will fall in that particular time frame. How do you know if a candlestick is rejected? So a rejection looks exactly like a shooting star bearish reversal candlestick or the bullish hammer reversal candlestick pattern. It is also known as a pin bar pattern, and it is shown by a long wick in contrast with a short body. Here you can see that this is a long wick which is generated and it shows a reversal hammer sign. It is a reversal of the price. So in this case, you can see that the price was rising, a long wick generated which shows that the selling pressure is much more as compared to the buying pressure, and the market will fall in the short term. So that's how we can confirm that the candlestick has been rejected. Next is can we predict the candlestick? So candlestick patterns are predictive in nature and they can predict moves in the market of bullish and bearish in nature. The vast majority of the candlestick technical analysis tools we use require several days of data to calculate the signal. That's why we call these kind of trailing indicators. So we have multiple indicators which we are going to talk in upcoming videos, like RSI indicator, MACD indicator likewise. So some of the indicators are leading indicators and some of the indicators are trailing indicators. So leading indicators is beneficial for intraday trading. So that will give us the signal before time, that is a probability. And in the case of trailing signal, so once the data has been generated, on that basis only the signal will be created by the indicator. Next is which candle is the best for intraday trading. The shooting star candlestick is primarily regarded as one of the most reliable and one of the best candlestick patterns for intraday trading. In this case of intraday type chart, you will typically see a bearish reversal candlestick which suggests a peak as opposed to a hammer candle which suggests a bottom trend. So a shooting star candlestick is the primary and the best candlestick for the intraday trading purposes. So also we have some more questions which are FAQ on candlestick chart, like what causes gaps in the candlestick, how can a candlestick burn, how accurate is a candlestick, how to analyze a candle, how many types of candlesticks are available, what reflects the candlestick, and so on. So these are the most FAQs on candlestick charts. So thanks for watching this particular video, and I'll see you in the next one.